Order filled.
Hey. Yo. Go. I'm watching the moves and playing it close. SOD, super soap. Rainy days, his and hers, matching coat. Jet is so big, feel like a boat, staying afloat. I'm watching the moves and playing it close. SOD, super soap. She was a hoe, but I ain't gon' judge, cause that was way.
Order filled.
Oh, bro, look at that precision. Targeted London lows. Targeted these lows over here. Super duper sexy. And look at that reaction off of it. Jit. Like, you have to be very dialed in to trade something like this, and a lot of times I would recommend don't even mess with it. It starts with the target. I was very convicted on London low being taken. So this is London low. You see these equal lows, clean target, liquidity's there. Liquidity is what moves the market. All right, we're gonna go over today's AM session. Your guru is going to suggest you not to trade these types of days, and that is because it is a high resistance liquidity run type of day, meaning liquidity is going to be ran after constantly in the lower time frames. So there's going to be no big expansion. Price is going to find its range, and it's going to consolidate and hunt liquidity within that range. So the only reason and the only way I'm able to trade this is I'm using 15-minute liquidity sweeps, and I'm using market structure, and then I'm also using the time of day. So as you can already see on the 2-minute, we sweep this, we come up, sweep, we shift down, but we come back up, sweeping more liquidity. Then we come down, sweep this level right here is equal lows. We come back down, sweep that. Then we're coming up, sweeping liquidity, and we're just gyrating back and forth. Is what I'm getting at. So you could see that on the higher time frames. Now, when we zoom in, we can have a little bit more precision and a little bit more clarity on what price is really doing. So again, we see that sweep come up. We see this sweep again up here. We see this sweep, and then everyone who went long right here, they're getting swept out. So and again, people, all of these are sell stop locations. I need to delete. So they're getting stopped out. These people who went long, they're getting stopped out. And then this was a pre-market liquidity pool. So if we zoom over here, I annotated this in my pre-market analysis. All this is resting liquidity. So we tag it and bag it. Immediately we shift out. So everyone going short right here, tagged. And then I want you to notice this inefficiency right here. On the 15-second chart, these will always get tagged, especially on high resistance liquidity days. It is a gap into a sweep of structure or a sweep of liquidity. So shorts, so people who went short right here, they're gonna trail their stop right here. They're probably gonna put it up here initially and then trail their stop right here. And then as they get into profits, they're probably gonna trail their stops down here. Nonetheless, this is a magnet for price. So that's what I'm monitoring. Okay, we sweep this liquidity, great. And then again, high liquidity runs. We almost tag it. We come back down, and then we get it. Price tags it, and then we see the same thing again. Same thing again, coming down, sweeping this liquidity. Right? So again, I'm just monitoring, man. I'm patient, I'm relaxed, I'm monitoring these liquidity levels. I'm annotating them, or I just see it because I see it because I'm like that. And then again, we come back up and we're tagging it. We're tagging it. So at this point now, I see price is looking a little bit bearish, but I still am not seeing what until this point. I got in, I believe it was up here, took some profits at this level, came back up, hit my trailing stop because I really wanted it to just go after London lows, which is this blue line down here. That's what I wanted. So I trailed my stop. It should go. If it was going to go on the 1 minute, you can see we engulfed this candle. We engulfed that candle and then broke this structure. So I really wanted to see us just flush down. So that's why I trailed my stop. We didn't. And then we come back up. We sweep this liquidity and we come back up. So now at this point I'm like, ugh, I'm chilling. I don't know what the deal is. But then we get another engulfing candle and an inverse fair value gap. So price, if it was hunting liquidity, this liquidity again, or wanted to sweep this again, which is unlikely because we just tagged it, and it's unlikely because we tagged it and then we shift lower, getting this liquidity, we come back up, we tag this liquidity. So we're already fairly good off of buy side liquidity. But so what's next? London lows, because we've already swept this liquidity. We've already tagged that. We've already gotten this liquidity. So sell side is good on that end. Buy side is good on this end. My only target at this point is going to be London lows. So as I said, we see this liquidity get swept, tagged back into a gap on the 15-second chart that leads into a liquidity sweep. A gap on the 15-second chart that leads into a liquidity sweep. Comes back into this one, the previous one, traded back into, and then we get traded back into on this one twice. But on the second time, price is looking extremely bullish, right? Because why would it come back up here again if we already tagged it? No need. But we engulfed it. We formed a lower high, and then we engulfed the previous candle, bullish candle, and then we created a inverse fair value gap. So price now has signaled to me, we want London lows, we want sell side liquidity, we want the stops down here, and we want London low. So that's what triggered me into this position right here. We tagged it. You can see it either the beginning of this video or my previous reel, and then price immediately reacts from that area. So again, when I'm trading high resistance liquidity run type of days, this choppy price action, I'm looking at liquidity. I'm looking at the overall market structure. Where are we in the range? How are we respecting the range's levels? And then has my liquidity been hunted yet? Has it been tagged? And obviously this one I used the inverse fair value gap as well. And then you can see price comes back, just hunting liquidity massively. So we get a fake out right here, massive move up, allowing nobody to get into this trade, and then we're just chop. So that is a quick breakdown And yeah, man, it takes experience, it takes technical intelligence and emotional intelligence, due to the fact that if you do not get in on the right trade, you got to accept your losses quickly on high resistance liquidity days. That's why people say don't trade them, because it's tough. It's tough. It sends you in a tilt a lot faster than a normal trading day.